What's up, SilverTraderFM subscribers and viewers? Markets are up today, up 2+ percent. Financials were rallying, consumer spending is up, Greek banks were merging. Wow. Seems like the recession or depression is finally over. Amazing. So consumers ramp up on spending, consumption rose 0.8% during the month, following a slight contraction in June. Bank of America sells stake in Chinese bank. I guess that's why Buffett is smiling in here. The U.S. largest bank by assets said it will sell 13.1 billion shares in the Chinese bank for 8.3 billion. So the sale will generate a gain of 3.3 billion for troubled BofA. China Construction Bank. So let's check out the bubble chart. Hartford Financial Services Group leading the race today, 12.9, almost 13% up. Let's see what's left at the bottom when everything's moving upward. Monsanto. I guess their genetically modified corn is not repelling the bugs like they said it would. Trouble for the company. So when the financials are leading the race, the market goes up. And the opposite can happen as well. Past month's performance, financials were doing badly. -11, -16 at 3 month, -18 at 6 month, and year to date it's -15.8. So where the market goes, the financials are usually leading the way. Gold was down about 2.2%, holding steady at 1775. That's a major support area. For silver, -1.4%, 40.20 was a major support area. But basically what I wanted to review with you today is this gold trading channel presented by Louise Yamada on CNBC. And basically what she was saying on here was, silver is still in this bullish long-term channel since the 1970s, right? Since the 1970s, the decoupling of gold and the dollar by Nixon in around 1971, August 15, caused gold to rise because the dollar was collapsing, right? And it reaches a parabolic height, say around here. So it was in this really steep channel of that time, which reached its peak at around early 80s. So what she's saying is, it's still in that bullish channel that started back in the 70s when the dollar started losing its value, and gold is accounting for that value loss. So what she's saying is she's seeing that it's piercing this middle part of this bullish long-term channel, and that pierce seems to be around the 2000 area where it could potentially go parabolic. And she sees a long-term goal for gold to be at around the 5,000 level, 5 to 10,000, looking at this chart, right? So if you see this, it can potentially go into steeper channel once it passes that middle line like it did back in the 80s, or even steeper than that if all hell breaks loose with the world reserve currency, the US dollar, breaking ground, right? Breaking its status as the world reserve currency. So we shall see if that is going to be the case, as Louise Yamada has presented here. So hey, you never know. Once in a while CNBC has intelligent presenters or technical analysts that actually know what the hell they're talking about. So it's a positive thing for gold. Looking at the S&P daily, been heading down. Monday, Tuesday, Wednesday, Thursday, Friday we popped down back into this negative channel, but then we popped up when Bernanke was saying the Economy, although slow, is recovering ever so slowly. Such BS and his lies rallied the markets up, and he was holding back on any quantitative easing as we all expected. No QE3 announcement, possibly held off until September 2020-ish, passing the buck to the big boss, President, and Congress. So today we broke a significant resistance right here of 1200 or 1204-ish, 1203, 1204. We closed at 1210 on the S&P. So we are making higher highs. So if you can continue the rally, you may find resistance here at 1218 and 1230-ish. Then again at 1260. So may keep bumping our heads here, making higher highs, but eventually I can see us roll over again on some bad news in September, maybe some bad European debt coming along that they cannot shuffle along to the next credit card. So we'll see, but I doubt that we'll close higher by, is it Thursday? Let's see, what is in the month? By Wednesday. Can we get up here by Wednesday? I highly doubt it. It's going to have to be two big bars tomorrow and Wednesday, but I highly doubt that we can close above this line, above 1300 by Wednesday. So looking at the monthly, that's looking a bit bearish for the S&P. So it's been technically broken already, but I doubt that we can get from here to there to close in bullish territory. We shall see. Let's take a look at gold. Looking at gold. Gold weekly's looking good. Last week we did a high of 1917 and we tested the lows of 1705. Well within this bluish channel. So I'm not sure what anybody on CNBC is talking about BS of a gold bubble, because if it were a gold bubble I would have expected it to drop way below 1500 and continue its downward progression. But instead we're finding major buying anytime it touches 1700. If it wanted to retest 1700, it could potentially retest that and even retest this 1660 area, then bounce back up. Let's look at how the day's looking. Just seem to have touched the low here last Thursday, Friday, Monday, and now Tuesday we're going a bit higher high, a little bit of higher highs, higher lows, and we just continue to go sideways a bit. Gold is still looking bullish. Fear not. Whenever there's a dip, buy it. And looking at the longer term silver on the daily, we are still within the bullish channel since August of last year, right? And we continue the bull run. We jabbed out, jabbed down, but continue nicely within the green channel upward. Anytime it dips near 40, I say hit the buy signal on your physical, on your ETFs. Buy silver for the long term, but preferably buy the physical. Anytime it dips near 40, silver is a good buy no matter what. It's continuing on its longer term bullish channel. Be not afraid of silver. Buy it within this area. So, this is SilverTraderFM. Keep stacking your gold and silver. We can go parabolic at any time in gold and silver. Keep stacking the real money. I'm SilverTraderFM. I'm out for now. Have a good week, guys.